All right, welcome everyone to another simulation session. This session, we're probably going to do pound, yen, or gold. Probably going to wait for guys to maybe kind of like given. I think we're going to do gold. Yeah, I think we're going to do gold. So simulation session is going to run from pre-New York up till London close because there have been instances where prices just range throughout pre-New York, and then we've seen some sort of a volume come in at around NYSE or even till London close. All right, just spilled my coffee over here. Okay, there we go. Perfect. All right. So let's do this. Let's pick out some random dates here. So it's going to be 2021. We're going to do from like November, whatever, November 20th up till 2022, December. We're at December. Let's do like till the 1st of December. We're going to get 25 dates. We only want Sundays because that's when the market opens. Sundays. Is it recording? It's recording. The volume is recording as well. Good. Very good. Very good. Can't have any mess ups. All right, so we got December, January, March, April, May. Ooh, close to my birthday, 22nd May. We got June, July, August, September, October, November. All right, let's do. All right, 24th April. Happens to be my dad's birthday. Amazing. Just our luck today. 24th April, 2022. April, we got 24th. So let's do gold, right? We'll do gold over here. Since there were no suggestions, we're going to stick with gold. We're going to start with like around 5,000. Let's do 5,000. New York close. We're looking at 1 to 100, leverage spread. We're going to do a fixed spread around like a 1.5 pip spread. It's going to be around 150.15 pip. Okay, whatever. And the history on the charts, we have to see 200 days. We'll start the simulation. Bring out our charts. Weekly, bring it out daily. Daily, 4 hour, 1 hour, 30 minute. 15 minute, maybe 15 minute. I really don't want to take a look at the weekly, so I'm going to remove the weekly and just going to focus on daily 4 hour, 1 hour, 30 minute, and then 15 minute. Maybe we're going to look at the 15 minute. Maybe like not a lot of stress is going to be put upon the 15-minute time frame because a weaker time frame, and to put a lot of stress on 15-minute time frame, it's always not that good. It's like when you put a lot of stress on a new worker, they're just going to say, oh man, it's so hard, I'm going to quit. So that's why I'm just going to focus on this right here. All right, so we got the 4 hour coming down. We see we're making a lower wick, but does this really matter at this point how the 4 hour candle is starting at around Asian session? Absolutely not. It does not matter at all. So what we got to do is we got to go towards our pre-New York, which will be bypassing London Open. So we're going to go towards pre-New York to 6 p.m., 7, 8, 9, 10, 11, 12, 1, 2, 3, London Open, 4, 5, 6. 6 a.m. Eastern right here. Let's go towards the daily now. Let's take a look at the daily here now. So let me just bring up my got my line studies, and I need charts right here. Okay, so what daily is doing at this point, first of all, we need to identify supports, and then we need to identify resistances, right? So what we see right here, the daily is creating some sort of a support. We're at support at this point, and we don't know whether price is gonna continue breaking below this area, or what's the plan of price on the daily time frame. We also got to take a look at the news over here. So there's no news coming up. Yeah, no USD news. So let's take a look on the 4 hour time frame. Looking at the 4 hour, we can clearly see that the 4 hour has also came down to some sort of support area, right? And seems like the volume is dying on the 4 hour because what we can clearly see, scales fix this, we can clearly see is that the previous 4 hour candle was a very strong 4 hour candle coming down. As it was strong, and then as it closed, the next candle, it closed a small body candle, which means like, there's no volume in this body at this point. And now we have the new 4-hour candle, which is forming now. We don't know whether this 4-hour candle is going to break its own low to continue down, which is like a 35 pip range to fill this wick, and then more if we do continue to push down, right? We have all this range down to 1897, or are we going to break, like, let's say a weak resistance to go up? Let's take a look on the 1-hour time frame. Now looking at the 1-hour time frame, we have some more information. Scale fix this. It feels pretty good to do a simulation and not trade the whole week, majority of the week. Haven't even really looked at charts that much. Now, so the 1-hour has the support, obviously, and then, we got some wicks up over here. So we got to take a look at this, what this means on the 30-minute time frame. Let's clone this over to the 30-minute. Zooming in onto the 30-minute, what we see right here is, obviously we're creating a support, but at the same time, we're also creating some sort of a resistance right here. Now, the challenging part is this, right? We are in a range, and if we measure this range, this is, I would say, like a 62 pip. It's a pretty big range. So if we break above, let's say, 1921, there's a 26 pip range up to this area, and if you do break above this minor resistance at this point, looking to the left hand side, we have like almost like a 37 40 pip range. So I would say we're in this ranging area at this point. So I think it's going to be a much better idea to wait to see how price is going to break below or break above. That's the only thing we can see. So I think next question is going to be like, where can we have an easier trade, right? Like, where can price move that we can say, okay, now we're going to have an easier trade. So I think a break below support, just like how Victor mentioned, break below support would be a much better idea because we have a cleaner move here, like 61 pips, 60 pips. So with volume, I think we can break below support much easier. So we're just going to wait over here now. We're going to wait to see how price is going to go, how price is going to break. And looking at the 15-minute, yeah, we're still consolidating here. Nothing to do, nothing to see. So perfect. We're going to wait, see where price goes, and then we're going to be making a decision whether we will take a buy or are we going to take a sell or what's going to happen. Very, very tough. Very tough. Mostly it's just tough because we're just consolidating. That's it. All right. We are 5 minutes in. Let's speed it up here a little bit so we get to 15 minutes quicker. Right? Here we are. Looking at the daily, we're at support. We can't buy because there's no confirmation for sells. 1 hour is coming heavy on support. All right. Pretty heavy on support. 30-minute is also heavy on support here. We broke the low of the previous 30-minute candle. Just got to wait to see how this candle is going to close. We're about to close. Now, this is pre-New York volume time, right? This is some sort of volume time at this point. And so we're about to close over here. In 9 minutes, 8 simulation minutes, we're about to close. Okay, we're about to close over here. Let's speed it up here a little bit more. Look at that candle. Just waiting for this candle to close, right? Just waiting for this candle to close. Because the thing is, this candle can, if it comes into this area here, it can literally reject from this area. So that's something we don't know if we want to be a part of, right? So that's why it's very important to wait for this candle to close. So we're about to close. And there we go. The candle has closed. We closed bearish, but we rejected this area. Now, I think, let's take a look on the 15-minute time frame. Here's the thing. Now, at this point, we got to use some sort of, I would say, experienced analysis, and that super amazing experienced analysis could be something like this. Like, if this 15-minute candle breaks below the low of the previous 15-minute candle, which is also break below a candle close support to the left-hand side, then I think we could anticipate volume to continue pushing down. And then in that way, it's going to mean like, okay, the 30-minute candle is breaking below this low to continue pushing down. I think that could be a idea looking at the 1 hour time frame. That's also going to be the 1 hour candle breaking its own low in the last 30 minutes to potentially continue pushing down. So I'm not going to use a whole lot of risk. Just gonna, like normally the risk is going to be 1 to 2%, but since this is the first trade of the week, first trade of the day, first and it's also an impulse entry, so I think it's going to be much better to kind of go with a lower risk, maybe. So let's just see over here. It has to make a top wick. Oh, look. So I guess that's a top wick. If we break the low, then that's definitely the top wick. Maybe price has formed. And oh wow, look at that. Rejection, rejection, punch down, rejection, punch down. Still kind of like deciding. Oh, damn, look at that. Not even breaking the low. Oh, there we go. That's the breaking the low right there, right? So this is where a sell position could go in very easily. Stops is going to be above this current candle because this is a perfect opportunity for a impulse entry. And whenever you're taking impulse entry, your stops go above the current candle and TP is whatever. So we're going to remove the take profit because we're going to be managing it. Looking at this on the 15-minute, same idea. We're breaking below the low of the previous 15-minute. 1 hour candle is breaking its own low. 4 hour is very bearish at this point. I mean, we've broken the low to the left hand side as well. There's volume now. Oh, sorry, that was a 1 hour. This is a 4 hour. So 4 hour needs to fill this wick here now because we've rejected the high. And I mean, yeah, daily is also bearish. So yeah, makes sense. Confirmations on the lower time frame and anticipation on the high time frame. Again, what? Confirmations on the lower time frame, anticipations on the high time frame. So now I'm only going to be looking at it from a risk management perspective. If price comes going to a drawdown or does something like that, we're probably going to close. Oh wow, look at that. We're about the 33 pips came pretty quick, or didn't really anticipate this. So yeah, so I guess I'm going to close 90% and put stops at break even. That's it. Yeah, that was pretty good. Pretty good anticipation, I would say, for price to move down. Funny how it worked pretty nicely. Look, we're still up about 20 pips, 18 pips. The runner is there, up about 0.7%, which is pretty good. Candle's coming to a close over here. We're going to see how the candles are going to close. I mean, if you do close below this area, man, we got such a clean range all the way down. Wow, look at that. Amazing range to go down. Just incredible. And we're also coming into high volume time over here now too. April, May, April, May. June, July, August was just horrible for pre-New York. Just horrible. All right. See, so now at this point, taking a sell is going to be very, very risky because we've already moved away from a zone. So the more price moves away from a zone, the riskier it gets at that point. Oh wow! Look at that, still moving on 50 pip move. Crazy. Now we need some sort of like a retracement if we think price is going to go down. So the wick on the left is less importance once we have bearish closure, even though it's above support. Bearish closure above support also depends on situation. Here, situation was different. Everything was bearish. We looked at the 15-minute time frame. We analyzed where 15-minute candle has to break. We analyzed the 4 hour. We analyzed the daily. Daily was also breaking below support. So confirmations on the lower time frames. And then maybe in the beginning, I wouldn't expect you to take a sell like that, and then if you do lose, you say, oh, Raja, blah, blah, blah. No. In the beginning, I would say maybe just watch it happen, maybe 10, 15 times, and then you can take a sell with a smaller lot size. Yeah, I think that's going to be great. That's going to be good. All right, look at this 30-minute time frame here. We need some sort of a correction. This is good. This candle is great because now, once this candle has formed, we can anticipate this candle to come up, create resistance, and then push down. Or if we create some sort of a resistance here to push down with NY opens here too. I think that's going to be good too. But yeah, but not trying to take any sells here because oh wow, look at that. Look, yeah, it's still moving pretty viciously here. So not trying to do anything over this. Wow. Let's take a look on the 15-minute. Oh, yeah, look at that. 15-minute close with no wick on the downside. So that wouldn't have been a trade at all. So yeah, just waiting here. We got about 7 simulation minutes left for the candle. So we're just gonna kind of like wait here for it to close. Because if we do break below this low now, because like we're creating, all right, the candle's about to close. We're gonna let the candle close. There we go. Because we're creating a resistance here, right? Creating a resistance here. So if we break above, then we can go up. Obviously, we still got to run it running 72 pips, amazing. But yeah, I mean, the next candle needs to kind of like create like a top wick, like liquidity wick, and then break the low. That's going to be much better because if it breaks the low in the first, oh yeah, never mind. Now we're creating that top wick, which is beautiful. Wow, just amazing. Look at this, creating a top wick. If we do break the low of the previous candle, I think there's a very, very good probability we can continue pushing down. And again, we have clean range to the left hand side. The cleanest ranges I've ever seen. The cleanest of the cleanest ranges. Look at that. We've broken the low. We already have a sell running. So it's going to be another like 0.5% because the damn stop loss is way too big, right? So let's take a look at this here. Let's remove this and let's take a look on the 15-minute time frame. 15-minute time. Now, usually this is going to be a very, very good, I would say, education point, right? Whenever you have a big stop, like obviously the stop right here is about like 50 pips, look at the smaller time frames. Now looking at the 15-minute time frame, based on the 15-minute time frame, the stop loss is also pretty big based on this current candle. If we put it right here, 32 pips, there's no telling when the next candle can wake up. So I would do this not a lot. Maybe like 1% of the time I'm going to do this. I'm going to consult the 5-minute time frame. So we're entering right here. Stop can be above this 5-minute candle because the 15-minute is way too big, man. It's just still going to be 18 pip stop. So maybe keep it as maybe keep it at around, I'd say right here, just above that 5-minute, and anticipating volume to continue pushing price down just above the 5-minute. All right, we're just waiting now. 15-minute candle's about to close. There we go. 15-minute candle has closed right there, and there's no news. There's no news. Once we start pushing down, oh wow, the first position is up 100 pips at this point. Oh, look at this. We're moving now. Look at that. We're coming down to the area. Let's close this right here. That's it, because we're coming down towards that sort of like a rejection area. So we're going to close this here as well. Oh, damn, 1,500 pips. Awesome. 1.8%. What is a good stop? Already talked about that. Awesome. Let's move on to the next day now. Beautiful. This was a very amazing trade. Looked like price rejected right there at the rejection area. All right, so we have what's this? 1 hour. This is 6 p.m. 7, 8, 9, 10, 11, 12, 1, 2, 3. This is London Open 4, 5, 6. 6 a.m. Eastern once again. Let's take a look on the daily time frame. So the daily has broken below the support. Very, very, I mean, it's a no-brainer. We've broken below the support, and now what's the probability that this daily candle can break its own low to go down, or we may retrace up to do some sort of retracement. 4-hour candles here, however, we are rejecting a support on the 4-hour, and this 4-hour candle closed the volatile candle because it broke the high, broke the low. This new one, we don't know how it's going to close. Let's take a look on the 1-hour time frame. Looking at the 1-hour time frame, now we have some more information. We have a resistance and we have a support right here. This support is good because price came down, created support, moved up. If we create some sort of a... Oh, power went off and my heating stopped. So now, if we create some sort of a support, we can anticipate price can continue pushing down, right? We can anticipate it. Looking at the 30-minute time frame, we have some more information now, which is pretty good. We've created a low at this point, obviously, and we have this resistance formed at this point. Let's remove this area from here. And yeah, I guess this is this is all that we have at this point. So we just gotta wait to see whether price is gonna continue to push up, break above this area, or are we gonna create resistance to continue pushing down? That's something we gotta wait and see now. That's it. Simple. Simple. Simple price action. Da 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 da. Right? Because first we got to identify the trend too, right? The trend is bearish at this point. So if the trend is bearish and if we want to take a buy, we want to see price break and close above this area and then take a buy. That's the only way we can take a buy. If price can, break and close above that area, that's it. There's no other way we can take a buy because we're in a downtrend. And if you do go up, I think we can come up to this area here maybe with volume. And as we can see right here, we just rejected that area and we're coming on down. So with the counter trend trade, we got to be very, very careful. Very, very careful. Now, this is the start of the next new 30-minute candle, and then we're going to, well, we are in pre-New York. So if we do get a break and close above this area, we can continue to push up. So we just got to wait. We got this new coffee, man. So amazing. Wow, so great. The coffee that kind of punches you. Oh yeah, look at that. See, now we've broken above this high to the left hand side, and we're also breaking above this high to the left hand side here as well. Now we need a candle to break and close above this area to take a buy, not just impulse entry because we got a rejection to the left hand side as well. So we can't take an impulse entry here, having a rejection to the left, anticipating price to no, we need a candle to break and close. Now, looking at the 15-minute time frame, that range is not enough. See that? We got a solid resistance here to the left-hand side. Now, someone might say, oh, but Raja, we had a rejection to the left-hand side here as well. Yeah, that's true. We did have a rejection, but we didn't have a support. We only have a rejection. Right here, we have a rejection and we have a resistance. So it becomes very tricky, right? So that's why it's important to wait for it to break and close. Because, if this candle can even, okay, it's about to close. Yeah, there we go. We close right here. If this candle could even have closed here, I'd be open for a buy for price to go up. Now, can't take a buy because the stop is going to be way too big back in the range. So it's better to wait for price to create some sort of like a rejection. So then we can take a buy and we can correct this move we had from yesterday. Do we have any news? We have no news. No news coming up. No news. No news. Now, if we can reject this area and maybe continue to push up, I think that's going to be a great idea. Yeah, just like that. 15-minute candle has closed. Yeah, look at this 15-minute candle, man. So amazing. This is so great. We've closed rejecting. And if this candle can break above this high, that's going to be a very good buy trade for price to go up. Or even if we create a bullish candle here on the 15-minute, then we can anticipate the next 30-minute to continue breaking above this high to continue pushing up. We have like a 55 pip range. So that's all we got to wait for now. That's it. Looks like it's just retracing here down, which is no problem. Looks like, oh, that's a pretty deeper retrace than expected. Oh, wow, look at that. We broke below this low over here. Awesome. Are we creating a possible fake out? Is that what's going on over here? Because if this move is a fake out, see now, you got to be able to think on your toes, right? You got to be able to, that's why we call market fluidity. Like, you got to be fluid in the markets. You got to be able to read and understand the candles and see what the hell's going on. Because, if you get stuck to just one bias, you're going to be forever frustrated, right? And these type of, I say like maneuvers in the market, you need some sort of an experience because look, initially we're looking for buys. I even talked about how we want the candles to close, 15-minute candle close with a rejection. And then I was like, okay, you know what? The next candle has to break above this high or create a bullish candle. Then we can take a buy. Amazing. But that did not happen. Now, like a robot, if that did not happen, that's it. Finish. that bias, that whole buying idea is out the window. You got to forget about that. Absolutely forget about that. That's canceled. If you guys know programming, we use if-else statements, right? If situation is not met, order is not going to get executed, finish, khalas. 30-minute time frame and 15-minute, 1 hour, whatever, a little bit different. Now look, we broke above this area, candle came down, closed back in the range. What does this mean? This means obviously we rejected to the left hand side, and this may be a fake out. We've done some webinars on fake outs. There's some on Smart Watcher Concepts. We got some on Market Fluidity as well. This is a classic case of a fake out. Now, also we have volume. If the next candle breaks below this low, I think there's a very good probability we can continue to push down, because this is a classic fake out. I mean, there's nothing more that screams a fake out than this. I mean, yeah, there we go. See, we're basically breaking below this low. So this is a very, very good example of a classic fake out. But since this is happening in the first 2 minutes, 3 minutes, may want to use like a lower risk. So again, we're going to go with a 0.5% risk. We got a visual mode, take a sell, stops are above this candle right here. Keep it a little bit higher in case it comes up. We gotta take into account the spread here as well. And yeah, 0.5% risk. Because if we couldn't maintain our move bullish and we're closing back in the range, then what's the probability it's going to go up versus what's the probability it's going to go down? And there's volume in the market. That's it. That's basically all what you're basically thinking about. What's the probability it's going to go up versus what's the probability it's going to go down? Obviously, you're going to say, well, we close back in the range, it can go down. Then someone can say, okay, yeah, it can go down. But once you say but, then there's no analysis. Then your analysis is out the window. Then you just got to sit and wait. Put stops at break even. That's it. Not sure if you guys can hear the dog in the background, but he's not happy today because we locked him up. He's locked up. Ooh, candle's about to close over here in 10 simulation minutes. Going great, going great. We are about to close, and that position is still open now. Haven't really been stopped out of that position. Oh, nice. Made that liquidity wick. If we did make that liquidity wick, and if we break below this low, I think, oh, yeah. Anyway, if we break below this low, I think there's a very good probability we can continue on pushing down. So let's move on to the next candle. Let's go to the 30-minute. Oh, nice. Yeah, we did move down. So we're at NY open over here. Okay. See now? Now look at this, right? We had high volume candle, high volume candle, high volume candle. What did we learn in the Candlestick Bible? What does this Candlestick Bible say? That when you have 3 falling soldiers, the next candle should also go down. Break the low, sell. Yeah, break the low, sell. So the next candle has to break the low in order to go down. So we have to wait for the candle to break the low. But what I see this also is that, we're in the range, and this is like a 37, 35%. Still good. I mean, yeah, if we break the low, we can go down too. But, I was mostly thinking about how, the candle closed bullish, so the volume may be changing unless we break the low. Yeah. Oh, wow, look at that. Yeah, just range over here now till London close. Anyway, let's move on to the next one here. So we have 6 p.m., 7, 8, 9, 10, 11, 12, 1, 2, 3, London open, 4, 5, 6. 6 a.m. Eastern once again. This is how you should be doing simulations, right? 1 to 2 trades, 1 trade in simulation, 2 simulation hours. Boom, move on to the next day. No questions asked. Move on to the next day. Like in the oh, look at this daily candle here. Now, let's take a look at this daily candle here. Let's see what this daily candle did. This daily candle basically broke below the low of the previous daily candle, making it sort of like a higher probability for maybe price to continue pushing down. But the problem is that we got a support to the left-hand side. Let's take a look on the 4-hour. Oh wow, look at this 4 hour candle here. Damn, so 4 hours, we basically created a resistance up here at like 1905. And now the 4 hour candles, they're see if we look at this, this 4 hour candle, it broke and closed below the support. And this 4 hour candle, I mean, if we break its own low, I think there's a very good probability we can fill the wick down at 1886, 67 pips away. Right? Selling idea is forming here in our heads. So Wednesday, let's see if we have any news. We have, oh, nice, no news. BOJ, but whatever, we'll see. Looking at the 1 hour time frame, yeah, 1 hour time frame is also coming up. We came up at this support. Let's see what it looks like here to the left hand side. This is, yeah, very tricky. So I guess we'll need the 1 hour candle to maybe break below this low to continue down to fill this wick. Can't really talk about buys from here. I think we'll need to look at the 30-minute for buys. So yeah, now looking at the 30-minute for some sort of selling confirmation. I think this looks good. I mean, if the next 30-minute candle can break below this low, I think there's a very good opportunity. Not even this low. I think break below the support. Yeah, take my words back. Yeah, we'll have to break below the support. Maybe this bullish candle's low for price to continue pushing down with volume. I think that's going to make much more sense. But looking at from a buying perspective here, this is a wick 30 pips away, and then we got a 64 pip range. Wow, man, this is crazy. Let's take a look at this range on the 15-minute time frame. I really want to take a look at this wick on the 15-minute time frame. If that's clean candles, then I guess we got some opportunity. 36 pips. I don't know. Yeah, we'll see. See how the 15-minute is just out of whack. You know, it's just not that good. So we gotta wait for this 30-minute candle to see if we do break below this low. I mean, the idea is sells here for me at this point. So yeah, so we're just gonna wait to see if we break below this low for price to continue pushing down. The whole idea about trading is just to wait to see if candles form the way you want them to form. I mean, that's it. That's all what it is. You're basically just waiting. It all boils down to just waiting for the candles to see if they form the way you want them to form. Okay, so now look at this, right? This is awesome. We have a bullish candle, small bullish candle, big rejection. We have a bearish candle. What does this mean? Where do you think the volume is changing to? I think the volume is changing to bearish because the candle bodies are changing here as well. Right? So if next candle can maybe close bearish, we can take a sell and go down. But if we close bullish, then that's another story. Looks like we're breaking above this high. No, yeah, we're breaking above this high. So I don't think selling would be a good idea. Because if we create this sort of like a support area, then these wicks, they basically become wick fills. They're only okay. So if this candle, let's say if this candle closes bearish, so we have like two things happening over here, right? So if this candle closes bearish, okay, then these rejections, this rejection here, you know, and this, like whatever, like that rejection, it's basically a rejection. But if this candle closes bullish, then basically these rejections then become wick fills. Then they're not rejections. They're like, okay, we have a bullish candle forming. If it closes bullish, then, you know, in time of volume, we got volume time. Then, you know, this candle becomes a wick fill, and then we can go up here as well. There's a webinar on my YouTube here as well, you know, like difference between wick fills and exhaustion wicks. So I think we can add another one to Smart Budget Concepts on that topic. So let's just see how this kind of closes. We've still got about 5 simulation minutes left over here. 6. All right, speed it up here a little bit. 8, 9, and there we go. Candle close. So this candle now, it has closed bullish. This is a bullish candle. I mean, we got, let's see. So if we do break above this high, we got like a 35, 36 pip range. How long the simulation usually be? So we're trading Wednesday, and then we're going to trade Thursday, and then we're done. So maybe like 15, 20 more minutes. 15, 20 more minutes. Bigger. Yeah, so I mean, if we break above this high, then obviously we can continue up to, like, you know, towards this resistance. We got enough range, but we need to see some sort of a lower wick formed for for a potential buy opportunity. See, it's breaking the high in the first second. Nah, not interested in that. Not interested in that, mate. Nope, nope, not even slightest bit of interest. Needs to make a lower wick and then needs to break the previous candle's high. Yeah, see there, it's making a lower wick now. This is an awesome lower wick. If it breaks the previous candle's high again now at this point, I think that's going to be a very, very good idea for a buy at this point. Yeah, look at that, right? We're the candle. See, it's breaking the high at this point now. Let's take a look on the 15 minute. 15 minute is also breaking above this high, right? 30 minute also breaking above this high after making that lower wick. 1 hour candle also breaking above this high. Yeah, 1 hour is, at this area, but we're looking more on 4 hours also rejecting here, I guess. 4 hours also coming to a close. 30 minute makes sense. 30 minute here makes sense. So, we're going to do a buy position. It's all impulse entries now. I mean, like I really want to use some sort of, like a higher risk, like 1%, but we're only getting impulse entries. So, yeah, what can you do? 15-minute candle has closed bullish over here. Let's see how we're going to manage this risk on the 15. See this 15-minute candle? 15-minute candles are making higher lows, higher highs. This is a higher low and a higher high. Higher low, higher high. We have volume at this point. So this candle has to break its own high. Yeah, right there. And then volume from pre-New York should continue pushing price up. Theoretically, I mean, we should continue pushing up. We're at like, ooh, I think I missed it. Looked away for a little bit. Yeah, I think, yeah. So I think right here around 17, 18 pips, I think we're probably gonna take 90% because we're in this range, and we don't know whether price will reject this area or, yeah, we just don't know that. We just don't know that because we rejected here before, so we don't know. Why previous wick high and not its own high? That's basically what I've seen, so I'm just going to go based off what I've seen. Because previously I would look at breaking its own high, but then I noticed that, like if, let's say, 20 out of 30 times, or even like, like 30 or 30, 31, 32 out of 50 times, if it breaks the previous candle's high, then there's a high probability it's going to continue in that direction. That's what I've seen, so you got to basically just sit and watch and then observe and, and create your some sort of like, I would say like thesis on that. So the candle is about to close over here. Let's see how this candle is going to close. We closed like small body, still rejecting here, looking at the 15-minute time frame. Yeah, strong rejection. 1 hour candle here as well, I mean, for the 1 hour candle to go up, it needs to probably make a lower wick to go up, but I guess not. Wow, 25 pips in the first 2 minutes. Damn, how's this candle going to close? Oh, went all the way up. Wow, that was uncalled for. 15-minute close with the rejection. Incredible. Oh, wow. Oh, wow. Next candle moved down. What happened to the daily over here? Did the daily move down? Oh, 4 hour moved down here as well. Broke below the low and moved down. Yeah, so this is something what I love to trade right here. 4 hour candle. Awesome. Great to see that it still works. So, power's back on. Gonna turn on the heater again. Okay, awesome, right? So daily candle moved down here the way we expected, but it came on later. So, that's fine. Let's move on to the next day, the Thursday. Is it cold there? Yeah, it's pretty cold, 5 degrees. All right, let's move on towards the Thursday here now. Pause this. We have 6 p.m., 7, 8, 9, 10, 11, 12, 1, 2, 3, London Open, 4, 5, 6, 6 a.m. Eastern, back again. All right, so let's remove these zones, looking at the 4 hour. 4 hours rejecting here. which is pretty easy to see, straightforward. We got rejection. We're probably coming up to retest some sort of, like support turned resistance to potentially continue pushing down. Maybe looking at the 1 hour time frame here, we are coming up towards this area here as well, because this is where we had a resistance and candle came up. We're kind of like rejecting this area. So maybe if we're creating some sort of like a resistance, we can continue pushing down, maybe, hopefully. Looking at the 30-minute time frame, however, 30-minute time frame is kind of like creating the same price action, I guess, because we have a support down here, maybe. And if we're creating a support trying to move up, then maybe we need to see some sort of resistance forming. Because if we can see some sort of a resistance form, then there's a very good potential for price to continue in this 85 pip range. Yeah, that's going to be a very good idea. Or if we can break above 1891, yeah, break above even this wick over here, because remember the last time we were talking about breaking above the wick, we had resistance to the left at last time, but here we have nothing. We have just this wick. So then if we break above this area, this wick becomes a wick fill, and then we can go up. Yeah, so what are you going to do? We're going to wait for candle close. We're going to wait to see, do we create resistance or do we break above? That's all we're going to wait for. Do we create resistance or do we break above? That's it. Is it recording? It's still recording. Perfect. So just going to wait. Oh, look at that. We're breaking below this low, but is breaking below the low enough? No. No, we got to wait. We have to wait. The fruits of waiting are much tastier than the fruits of not waiting and trying to eat them when the fruit is still raw, when it's not ripe. Okay, so look at that, right? 30-minute candle closed bearish. And now this candle here, oh, it's still maybe rejecting this area here. Let's take a look on the 15-minute. 15-minute is rejecting this minor support. Yeah, it could be a little difficult here, to be honest. 1 hour candle is whatever. Yeah, it's not basically what we want to see, because the 15-minute also had rejection, and I mean, it's basically not what we want to see. We want to see something that we can identify and say, oh yeah, you know what, this makes sense. Currently, this whole thing does not make sense at all. See, this candle's coming up. We're still under a resistance. And yeah, I mean, if we close bullish, man, we're basically creating support on 30-minute, and then we're only going to be looking at for price to break below the support to go down this 60 pip range, right? So this, yeah, see this now? This candle, it needs to break below the low. If we break below this low, ooh, almost, then we can go down. Look at this. This is a very amazing range. 60 pip range. Where do you get 60 pip range? Where? A range within a range. This is 60 pip range within a range. When do you even get that 60 pip range within a range? That's just pips trying to fall in your lap here. Look at this, 46 pip range below that wick. Just amazing. 30-minute candle has closed. What's happening? Nothing. Absolutely nothing. We're just waiting here. Let's take a look on 15-minute. 15-minute garbage. Nothing happening on 15-minute here as well. How big is this range over here? Yeah, 43 pips. A range within a range. Even on the 15-minute, there's a range within a range. If you do break up, it's going to be great too. Let's take a look on the daily here. Daily is trying to retrace. 4 hour is also trying to retrace. 1 hour candle is what? Oh, 1 hour candle. Oh, look at that. 1 hour candle. If we respect this high on the 1 hour candle, I think we can go down on the 1 hour, right? Can't we just visualize 1 hour candle to go down if we respect this high? But we got to respect that high, right? Let's see if we respect that high. We're about 20 minutes for the candle to close. Oh, it's breaking the high. Probably to go up. Or what the hell's going on over here? This 30-minute candle can't make up its mind. So this is me. I'm always talking to myself. Whenever candles are closing, forming, we can see now this candle is moving down. Look at that. 1 hour candle is moving down. 15-minute candle is moving down. We're coming down to the support. Oh, wow. Look at that move. We're really pushing down over here. Damn. This is a new candle form now. Now, yeah, this is great. Look at this 30-minute candle closing below this area. This is the new 30-minute candle forming now at this point. If this candle breaks below this low over here, or I mean, there's a very good probability we can go down 46 pip range. Very, 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 very good range to go down. 15-minute candle here as well. If we can break below this low, we can go down. Very, very good range to go down. 1 hour candle here as well. I mean, what's the probability, guys? Price is going to go down. Lee said, wick up, break low, sell. Yep, that's it. Easy sell. Taki King, Tommy. Yeah, great. Great, man. See that? We're breaking the low over here. This is the opportunity for price to go down. So we're going to take a sell over here. The stops are going to be maybe somewhere around a couple pips above this area. We can have our stops, and we can anticipate price to continue pushing down. Right? Impulse entries. Close this. Close this. Yep. In the first minute with NY open, we have executed on a trade for price to continue. Oh, damn. Damn. Wow, what happened over here? All right, we got to regroup. We got to regroup again. See, it's breaking the previous lows here again. So now we can give our trade a second chance, right? It's because it's breaking the low again. So I'm using the same concept we applied in the previous one, where it's breaking the previous low again for potentially price to continue pushing down. That's what we're doing at this point. Wow, giving this trade a second chance. The first chance it wasn't happy, I guess. All right. The 15-minute candle is about to close. There we go. 15-minute candle has closed. 15-minute candle has closed bearish. And this is the new 15-minute candle forming now. It's making a top wick. And it's trying to break the low right here. And if it's breaking the low right here, maybe we can add a position here for price to continue pushing down, right? Yeah, I guess we can add a position right there. Adding a risk onto a winning trade, I think that's a very, very good idea to kind of make back what we lost here as well, because the probability for price to go down is much. Wow, look at that. How many pips is this? The first one is around 18 pips. Maybe, secure that. Now, this one here as well, it's coming down very nicely. Oh, wow, look at that. Coming close right here. Maybe close partials, close 90%. Put stops at break even. And yeah, if we do continue down towards support, amazing. If we don't, then it's still whatever, because we're still in a range. Remember this: whenever price is in a range, it's never going to go to the end of the range. Well, I mean, there's a low probability it's going to touch the other end of the range. It's a low probability. I'm not saying there's no probability. It's a low probability. See if we have any news. We have no news. Unemployment claims we have. Oh, okay, that's interesting. Oh, we got stopped out. Yeah, that was a good trade. We took a trade, got stopped out, did about 2.9% this week, no problem. We took a trade, got stopped out, price ended up making a top wick, and then we looked to see where we can add a position to that trade. Great. Let's take a look at this. Trades, closed trades. Let's take a look at this right here. So in that trade, we lost about $23. And then by adding risk back to the trade, we made about $29. So we did about $6 in profit with that trade. Still very good. The low probability you just spoke about just happened. Yeah, exactly. That just happened. And that, I guess, that happened with news, I guess. Yeah, still pretty good. Awesome. What's the biggest lot size you can use with the $100, $100 million? I have no idea. No idea. Uh, I couldn't tell you, man. Why do you want to use the maximum lot size? Because if you're going to deposit $100 and try to use the maximum lot size to make big win, there's a high chance you're going to lose that 100. You're going to add another 100 and another 100 and another 100. And after a few months, you're going to see you added maybe like $1,000. Why not just add $1,000 and just do like 1 to 2% risk? You know, that's the best thing. What leverage is better? I use 100 to 1. The the aim is not to, risk a lot. Oh, I just said I use 100 to 1. So I'm not sure what part of that was not English. Bro, come on. Anyway, so the recording is going to be uploaded to database in about a few hours. Thank you so much for tuning in. Hope this helped. It helped me a lot because I've been looking at some concepts about breaking the previous low again, and that's been like that's something been solidifying in my mind too. Can you explain a good stop? Look at the simulation. This whole simulation is about stops. The previous simulation is all about stops. All the simulations we've done, they're all about having good stops. So yeah, you gotta take a look at that. So take care. Happy holidays. I'm sure we're all happy, and we're gonna see you guys probably. I don't know. Not next weekend, but the one after that. I may do a webinar in the middle. I don't know. We have it's Christmas Eve today. Oh, okay. Awesome. Awesome. Take care. Have a great weekend.